Everything you just saw, the indicator, the EA, the backtesting tool, I built with AI. I'm a trader, not a software engineer. And for the last couple of years, I've been building tools like this with AI. So in this video, I'm gonna give you the exact process I use to take a trading idea and turn it into a working backtested strategy. And the whole point is that you can follow it even if you're not a developer. You direct it, the AI does the heavy lifting. The reason all of this works is a tool called Claude, and more importantly, a process, an order you do things in. Most people skip that order, and that's exactly what their strategies come out random. So I'll walk you through the whole thing, start to finish, using the real strategy I built. Quick groundwork. Claude isn't a chatbot in a browser. It lives on your computer, it reads your actual files, it writes the code, it runs it, and then it reads the results back and reacts. Which means the skill that actually matters here isn't writing the code, it's knowing what to ask for and being able to smell when something's off. That's a trader's skill. You already know what a clean entry looks like. You already know when a backtest looks too good to be true. That domain knowledge is the part the AI doesn't have. So whatever level you're at with code, you can run this process because your job is to direct it. And it starts with a question that most people get completely backwards. Before I ask for a strategy, before I ask for anything, I asked it one thing: what actually makes a trading indicator good? And that sounds like a throwaway question, but it's the whole foundation. Because if you don't define good first, you'll fall in love with the first impressive looking thing it hands you. So now I have a definition of good, and only then did I ask for the strategy itself. Here where the prompt really matters, because how you ask decides what you get. I didn't say give me a strategy. I told it to act as an expert who builds genuinely profitable strategies, to design what we expect to have a high profit factor, and to make the complexity serve the profitability, and not the other way around. Ask vaguely and you get a moving average crossover. Ask like that and you get this. And honestly, that's a real strategy. The core of it is exactly what a good discretionary trader does in their head. And this is the exact point where almost everyone makes the mistakes that cost them 3 days. They go straight to code. I didn't. So instead of asking it to build the indicator, I asked it to write a specification first, a PRD. And I know that sounds like a corporate paperwork. So let me tell you why it's the single biggest thing standing between you and a working indicator. When you just say build it off the back of a chat, the AI is holding the whole design loosely in its head. So it drifts, it forgets the threshold you agreed on, it improvises, and you've got nothing to point back to and say, no, that's not what you decided. A specification kills all of that. Every feature, every parameter, every number, every part of the display written down before a single line of code exists. The AI builds against the document, and when something's wrong, you both go back to the same page instead of arguing. So I asked for it in one sentence, and what came back was this. Look at how complete this is. It's got the target profit factor, the win rate range, every adjustable setting, the exact layout on the chart. The specification is the thing you are really building. The code is just a translation of it. Get the spec right and the code almost writes itself. So I told it to do exactly that. Build the indicator from the spec. And a few minutes later, I had something on my chart. Now it didn't compile perfectly the first time. There was a bug. But here's the part that makes this possible for someone who isn't a full-time developer. I never once opened the file and fixed anything by hand. I just describe what I was seeing. For example, the arrows only show up on the latest candle. These histogram numbers are way too big. And it found its own mistakes and fixed them. You debug by describing symptoms. I'm not gonna drag you through each fix, because that's not the lesson. The lesson is what happened after the bugs were gone. Because now I had this beautiful indicator. Arrows in sensible spots, stop levels, targets, the regime coloring, it looked completely done. And that is the most dangerous moment in the entire process, because looks right and is right are two completely different things. The indicator looking clean on the chart tells you nothing about whether the math underneath is exactly doing what you think it's doing. And this is what the moment that almost caught me out. I nearly just trusted it. So the real question became, how do I prove it's correct? And the obvious answer turned out to be a trap. My first instinct was the obvious one. Ask the AI to write a second script that rechecks the math. pull the same data, run the same calculation, and see if they match. It's worthless. Think about it. The same AI wrote the indicator. If it misunderstood my strategy the first time, it'll misunderstood it the exact same way in the checker. They will agree perfectly and both be wrong. You never let the thing that did the work also grade the work. So I pushed back, asked the blunt question: how can I actually be sure this indicator behaves the way it's supposed to? And what it came up with is genuinely clever. Instead of recalculating anything, you make the indicator confess. You have it log its own decisions. Write down the exact numbers it used for every single signal it fires. Then you check that. You're not comparing two guesses anymore. You're reading what it actually did and asking whether those decisions hold up. 23 signals, every one of them logged with its real numbers. And only at that point did I actually trust what was on my chart. Getting the indicator to log its real signals was half what I needed. The other half was pulling real price data straight out of MT5. So we put both into a single tool. And once Claude could read the log signals and fetch the real price bars itself, it could replay every trade against what actually happened in the market, which is the backtest. And the backtest is where the strategy finally had to tell the truth. A trustworthy one never re-guesses the strategy. It just takes the signals the indicator genuinely logged and replays them against real broker prices. And it scores everything in R, which is risk units. So a loss is -1. A 2-to-1 win rate is +2. And the results means the same thing on any market. Now there is a lot more to actually reading a backtest properly. Profit factor, drawdown, what separates a good result from a flattering one, but that's for another video. So subscribe if you don't want to miss it. For now, the only question I cared about, I ran the strategy across 16 years of EURUSD and waited for the results. It was almost break-even. And this is where most people quietly delete the backtest and pretend it never happened, because they only keep the results that flatter them, which is exactly how people end up trading garbage with confidence. I did the opposite. I treated the loss as information, and I asked why, and the answer was sitting in the strategy the whole time. This strategy runs on momentum, but I'd been testing it on EURUSD, which is not a trending pair. I was asking a trend strategy to perform on a market that barely trends. So before I touched a single setting, I changed the one thing that actually mattered. I pointed it at gold. Gold actually moves. Long sustainable runs. Real momentum, which is exactly the kind of market this strategy was designed for. And for the first time in the entire project, the number that came back was above water. Of course, there was one ugly year, 2021, where gold went sideways and the strategy kept buying breakouts that died on it. But that's not a flaw, because that's what trend following looks like. You grind out while things trend and you give some back when the market chops. So now I wanted to make it better, specifically to soften the bad year. And this is where I'd wrecked it if I weren't careful. So when I asked Claude how to refine it, the first thing it pushed back with wasn't a setting to change. It was a rule to keep me honest. Split the price history in two, yield the change on the first half, and only trust it if it also holds up on the second half. The data that the strategy had never seen. If something only works on the data you built it on, it's fooling you, and it'll fall apart the second it goes live. So Claude worked through a few candidates under that rule, and most failed on the second half, and only one held up on both. That pushed the profit factor from around 1.16 to roughly 1.31, and nearly half the worst drawdown. And then I did the single hardest thing in trading. I stopped. Because if you keep refining with the same data, eventually something passed by pure luck, and you've invented an edge that was never there. That's why the strategy we just walked through ended where the honest one do. A real modest edge on gold, profit factor 1.31, and with one weakness I already know about. That's not a get-rich screenshot. It's something rare, a result I'd actually trust. But the strategy was never really the point. The point is the path, because you can run any idea through it. Define what is a good strategy before you build it. Get the AI to design it. Make it write the spec before it writes the code. Backtest it on real data and read the losses honestly. And when you refine, avoid overfitting. That's the process anyone can run. It just takes thinking like a trader and directing the AI. By the way, the backtesting tool I use is free. It's called MBT. And there is a full tutorial that you can find the link both in the description and somewhere on the screen. So pick a strategy you've always wondered about, run it through these, and finally find out whether it's real. Okay, I'll see you in the next video.